Good afternoon. In this video, we're going to go over this past week's trades in the weekly recap. Before I get into the recap video, if you're not in the room, you can find the link in the description of the video and in my bio section on social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. Now, we didn't have Monday because Monday obviously was the 4th of July. The market was closed, so it was a short week, 4 days. I had, let's see, 25 wins and 0 losses for the short week. Traditionally, I usually kind of struggle on short weeks. I don't know why that is, but usually when I have a 4-day week, I kind of struggle. And to have a strong, flawless week, this short week was very, very surprising and very happy to have that. So, because of my history with short weeks, so had a great flawless week. So I couldn't have asked for a better week than to be in a short one. But now, obviously, I only played with SPY and SPX all week. But on the Trade Ideas channel, if you're new, Trade Ideas channel, every morning I try to post a play that I like before the market opens. So on the 5th, which was Tuesday, I put SPY puts under 376 and Amazon calls over 109. I wasn't quite sure what was going to happen because we had such a huge drop overnight on Monday and going into Tuesday morning. So I was not expecting, because we're up, 383, and by the time we open, we're down to 375. We're already down like $8. So I was kind of surprised about that, and I don't like these big gap up and gap downs, because what end up usually happening is that they end up either chopping or they just go the other way. So when you have an $8 drop, I'm very skeptical of taking puts after an $8 drop. I mean, yeah, I can drop a lot more, and if you do take puts, I always stress that after a huge gap down, if you're actually taking puts into a gap down, a major gap down, for instance, that be ready to take it, because it's probably going to be a fake out, and this is exactly what it did. But put up a nice J hook for the rest of the day. But we did grab puts at open. I've been waiting out the 10-minute candle. I usually do that on SPY, but certain tickers like Tesla and Baba, I don't usually wait out the first 10 minutes, but after getting burned by them over the last couple weeks, I am waiting 10 minutes on everything. So I don't care what the ticker is anymore, because Baba and Tesla used to have breakdown or pop immediately, but lately they've been faking out like SPY does, so I've been waiting on those two. But I know I'm kind of like rambling, but just wanted to blurt that out there. So I did take SPY 374 puts at 9:45. So I waited the first 10 minutes out, and it popped up. Then let's see, 9:45. Yeah. It started to get down a little bit here, and then it started to pop up. I'm not quite sure if I actually got it down here. I don't know if I can break down the candle. Oh, wrong one. Break down the candle and see exactly where. I gotta change the time frame because I'm 4 days out. Let's see. Is this the 5th? Yep. 45. Yeah, right here. Yeah, it did a fake out on me. Then it popped back up. Yeah, that's what I thought it did. I did grab the new lower day, but get the right day here. Did grab the new lower day, but it popped against me immediately. But I stayed with it. As long as it didn't break the higher day or the open range candle right here, then I was fine holding it. So then it finally did come back down. So those 270 puts I got, 274 puts I got at 210, went from 210 to 247. So a nice little play there. Then I switched to calls at 1013, which is right here. Now the reason for that, remember, that the normal range on SPY is about 5 to 6 normally. If it's like, you can even say that 4 to 5 is a choppy day based on the volatility lately. But the average range on SPY is 5 to 6, and extreme range is around 10 to 15. So after being almost a $10 drop, actually it was a $10 drop from here to here, it's $10. Then it started to come back up and got right into this level right here, the 374.50 level. When it got and broke that, that's where I switched to the 375 calls, thinking that we were going to get a massive pop. I was thinking we were going to get this right here from continuing from this, but it didn't drop back down. But it did pop right here. So I took the 375 calls at 170 and it went to 170 to 230. So that was a nice 60-cent win. Now we didn't get 60 cents out of I almost said Tesla, out of SPY. That is pretty good because that's equivalent to $6 in SPX. And if you're up $6 in SPX and you're not taking it, you need to slap yourself, because that's $6 move out of 10 cons is $6,000. And if you're not taking a $6,000 play, you really need to rethink what you're doing. But anyway, 60 cents. That's really good. I know SPY can do dollars, but to do a dollar move on SPY options alone, it's going to move pretty significantly. So, but yeah, that was a nice play, 60 cents on that. Then I switched to SPX. SPX was pretty cheap all week long, so that was one of the reasons why I did like this week, is that it was cheap. So yeah, I did grab 37.30 puts at 10.46, which is I gotta switch my glasses here. 10.46 is right here in this big red candle. Now I'm not quite sure if that was news related, but when we had this massive candle right here, I didn't chase it. I almost think I said in the room that I was waiting for the retracement, so when it retraced back up, that's where I did actually end up grabbing it. So I grabbed the 37.30 puts at $5.40, and then went from 5.40 to 8.70 in this little drop right here. So that is a nice little move. Then I switched to, no, I still had puts. I played the 37.30 puts again at 11.18, which is right here. Now, what I probably did was, because it popped up, we dropped here and it popped back up to pre-market to higher day, which is the open range candle high, and it quickly and viciously rejected it, and it came back to lower day again pretty fast. I thought for sure we were going to break. Now I know that we're already in a $10 range, but remember, SPY can go $15 very, very easily, and this was such a nasty drop right here that when I sold it at lower day, and you gotta anticipate that it's gonna bounce at lower day, because it did. It bounced a little bit. When it did bounce, that is where I actually reloaded the 37.30 puts again, but I got them at 560, and right in this candle, and it dropped a little bit. Didn't get much out of it, but I got let's see, it went from 560 to 740. That's a $1.80 move, and you got to take that $1.80. That's the 10 cons. It's $1,800. The average person does not make $1,800 a day, so you got to take that. And I know that scalping, a lot of people don't like scalping. A lot of people like waiting for those massive home runs. If you're going to sit and wait for home runs, you're going to lose more than you're going to make. Yeah, you may eventually hit a home run and make a ton of money, but you're going to lose a ton in the process, and you may not even break even. You may actually be quite red trying to hold for home runs. So you got to take it. If you don't take it fully, at least reduce the risk and save the rest for break even. Me, I kind of like to hit it and quit it. So if you're up a couple dollars, I just take it, and and if it runs, it runs. I don't really care. I don't lose sleep over stuff like that. I mean, yeah, maybe I'll lose a bigger play, but I don't really care. I play to just take the meat in the move. I don't try to catch the bottom. I try to catch the top. So yeah. Then the next play I took puts at 11.44, which is right. Let's see, 11.44. right here. I was thinking it was going to reject this area again around the 375, 80-ish area. And so I grabbed the 37.40 puts at $5.30. I did hold it, thinking it was going to reject this area again. And I ended up adding it, like, say, what was it, 1202, which is right here at the high and day again. So I kind of got a little early. Sometimes what happens is when SPY will reject an area or bounce in an area, it doesn't always reject and bounce at the exact dollar or the exact moving average. Like if you watch, like you'll see it reject the 20 EMA, and sometimes it'll reject it like dead on, like right here, and sometimes it will come close to it and not really test it or touch it, and rejects early or bounces early. So sometimes I buy like a feeler in advance, anticipating that happening, and in case it comes up short or does do it before it touches. So that's why I end up buying a little bit in advance, thinking of that. So it didn't. That's why I didn't wait till up here. I kind of grabbed it here thinking we were going to reject a little early, but when it did make the higher day again right here, that's where I ended up adding. So I added more at 350. My new average was at 380. So you get a little bit of a rejection. As you can see, the wick right here touched higher day and it came back down. So I was able to get out unscathed. I did add at the right time. Now that's what the key thing has been when I add. I mean, I always used to say in the room that I will never average down on expiration day, but lately I have been, because the market, all the pops end up selling off most of the time, or like a big majority of the time. So I have no fear in averaging down on puts, as long as they're not too far out of the money and they're close to the money. But when you're too far out of the money, you just, theater will wreck it too much for it to even turn green. But if you strategically add at the right places and you're not that far out of the money, you can actually kind of recover. So I have been doing really well at averaging down at the right moments. And I've gotten burned a couple times too. So I'm not saying I'm perfect at it, because I'm far from that. But I averaged down right at the higher day again, and I was able to get the drop. So my average of 380, and then went from 380 to 530. So I did manage to get out with some money. Now, even if I didn't average down, it did go to 530. I could have got out break even. And I know a few times I've been playing, I think especially in the challenge, where I've actually been red. Then when it turns green, I don't take it and cut it evenly, or cut it with a tiny bit. I kind of get a little greedy and want a bigger move. Then it goes red on me again. Then it gets green again. And I was like, oh no, I'm going to hold it for a bigger move. And then it goes red again. Then it goes green again. Then I end up taking it flat. Then it rips. So that's how it's been. And you just cannot let a green position turn red. So, but especially when it's been red for so long, because if you actually bought it here, right here I should say, and you didn't average down, you had to have waited a few candles, almost a half an hour, because these are 10-minute candles. So yeah, but that did work out for me. I averaged down at the right time, and I was able to get, what was it, like $1.50 out of that play. So then I ended up playing SPX puts again at let's see, 12.15, which is what, right here. Now I grabbed it here pre-market. You can see right here, these candles right here. This is where it broke down and retested that area. That's why I grabbed the 37.50 puts this time, because before when I got it here, I had 37.40, but I went closer to at the money. I adjusted my strike, got the 37.50 puts at $7 at 12.15. Wait, oh, I got it here. Okay, I did get it here. Because it opened here, and this is where I sold into. Then when it popped back up here, this is where I reloaded. Yeah, I got the 37.50 at $7 at 12.15 in this candle right here, because I sold it down here. So I got close to at the money. Then it popped on me. I didn't dump it. I kept it. I averaged more at 350 again, making my new average down to 395, and then went from 395 to 590. Now, now I wasn't expecting SPY to do this. I was pretty much trying to like guess the top. I mean, I was not expecting SPY to have this massive move, so that's why I kept, shorting the pops, thinking that 90% of the time shorting the pops has been working in this bear market for the last few months. So nothing has changed. Inflation's still raging. It's not flattening yet. So these are just 1-day rallies or maybe 2-day rallies here and there. So keep using the mentality of shorting the pops, and I was not expecting this kind of a move. So that's why I kept shorting the pops. Stay within my thesis, even though my thesis was kind of wrong. But if you're winning and you're taking moves, and taking the plays, you're not getting greedy, and you're taking the dollar win, $2 wins here and there. I mean, you'll be doing fine. If you're getting greedy and holding for $5 or $10 moves, then you just need to rethink what you're doing. Because you don't know. If we all knew which one was going to be the big play, then I think everybody would hold for the $10, $20 move, but you don't know. So hindsight's only 20/20. So why I kept shorting the top, not thinking, it's going to keep going and going and going. I actually kind of thought this day was going to be a flat day, kind of choppy, because usually when you have these big moves, you kind of get a choppy move, like right in here on the hourly right here on Friday. Was this Friday? Yeah, the Friday. Look at that, kind of choppy right there. But yeah, we got that move right there. Then I waited. I didn't trade again for the rest of the day. I did not feel comfortable buying this breakout right here, because it felt like every time it broke out, it faded instantly. Like right here, it tried to break out and it dropped back down. Then it finally broke out, then it failed. Then it broke out again and just pulled back a little bit. Broke out again, pull back. Then it broke out. Then it actually really broke out and actually got some steam behind it. But I just did not feel comfortable, because it just kept. When you're trading in real time, you got to look at what's actually happening. And to me, at this point in time, the breakouts were fading as soon as they broke out until right here. And at this point in time, it's what, 378. So it's already a $5 move at the 200 EMA, and that just, to me, that just seems very, very really sketchy right there. And in fact, I did take this right here. I did take 3,800 puts at 233, which is right here at the 200 EMA. I took 3,800 puts at 510, and it ripped on me. And then I have to actually look at the alerts, because they're somehow blended together, and I can't really see what the timestamp is. I added more at 238. 238, which is right here. Now, why did I grab it right here? I might have grabbed it right after this extreme green candle. Let me just back it out just a little bit. Let's see if there's a reason why I grabbed it here. There's a little bit of resistance right here at the. Oh, it's a 380 level. That's why I ended up grabbing it. Yep, that's why I grabbed it. Yeah, as soon as it hit, let me just back out where I could actually where I see it. Okay, the 380 level, you can see right here. This is where it was rejecting right here. When I had this strong green candle through the 380 level, went to what, 380? What was the high of that candle? 380.43. When it bursted through the 380 level and it started to show just a slight bit of weakness right here, you could see some. I remember seeing some orders coming in and dumping in. Dumping on the dumping the cells right here. That's right. I ended up grabbing it. Plus, when it got over 380, that I knew that it was going to react. I mean, it's been reacting here. It's a big number. Even though it went through the 380 level, really, really strong SPY. When it breaks out, it will either undershoot or overshoot. And usually, it rarely ever, goes to like the 380 level exactly and reject. It will. overshoot like it right here, like it did here. And that's why I ended up taking it. As soon as it broke through the 380 level, I grabbed puts. I started to average down. I had them at what, 510. I added a bunch more at 380, making my average at 415, and I went from 415 to 490. So I was able to get out green. Kind of got a little daring on that little play, but 380 level was a big level. Didn't really react much to it, which is kind of surprising. I mean, it reacted a little bit to it, pulled back, popped up, tried to break out again and pull back, and then it ripped again. SPY was just acting very stupid this day, and every time it broke out, it would just minus this right here. This is the only area where it broke out where it didn't have a little bit of a fade. Did it here, 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 and here. So yeah, I was not expecting this kind of a move. So yeah, nothing's really changed. Still short the pops until something has changed. So that's gonna be it for what, Tuesday. I'm getting my days mixed up because of I'm not used to having Monday off. Now, I didn't play at all until FOMC. Usually, I used to play a little bit during FOMC, but before FOMC, but it's been so choppy that it's not been worth it. So I've been just like sitting out until FOMC. Plus, I wasn't around Wednesday morning anyways. I had to go to Toronto early in the morning. So I just waited. I did get back, I don't know, right around 11. So I just sat here for 3 hours just watching everything until FOMC. And then I took my usual famous FOMC strangle play. I took 3,800 puts at 410, and I took 3,850 calls at 610. And I grab them right at, I used to grab them at 1:55, 5 minutes before FOMC, but people don't have time to react to get in, so I've been getting them a little early. And in fact, even in the room, like 15 minutes ahead of time, I will post, I'm eyeing such and such puts, I'm eyeing such and such calls, and I put that in there so that people can get them loaded. That's been like the key factor of having things getting loaded, so people can just jump in. But sometimes when I say I'm eyeing this, I might not take it because 15 minutes is a lot of time for theta, especially if it's chopping. I might have to adjust the strike price, and so I do adjust at the last minute, the last 5 or 10 minutes. So at least I give people an idea what I'm looking at, what I'm doing, and they don't have to take the strikes I take. They can take their own strikes. You can do whatever you want. Remember, none of this is financial advice. It never has been, never will be. I'm just sharing what I'm doing and what I'm seeing. And if you like the play, you like it. You don't have to take it. So plain and simple. What I do is what I'm doing. And if you take it, that's up to you. But anyways, 2 o'clock, first candle was kind of wild. Now I sold. I have to look at the exits. I think I sold the puts first. Let's see. I said that very violently. Puts. No, it looks like I sold. Opened up. And it popped up. Wait, we opened here. It looks like I sold some calls first. I sold some calls at 850. So it popped first. And I didn't sell all the calls. I just popped. Now, the one thing that FOMC has been doing lately, it's been doing a drop and pop. It drops first and it pops. And I thought for sure at this time was the time it was going to, because usually used to pop then drop. So it's been dropping and popping the last four or five. But before that was popping and dropping. So, but yeah, when it had the calls popped at first, I was like, okay, I unloaded the calls because usually the first move is the wrong one. So when it popped, I unloaded some calls. I didn't have a chance to get it all out. I dumped a bunch of them. I kept some in case it did rip later, because it did. Then when it dropped, I sold the puts. I sold puts in the 480 level, then 340, all out at 340. What did I get at 410? Yeah, I was able to get out with some profit on it. when this dropped. So yeah, it popped and it dropped. So I unloaded calls in the first part. Then when it dropped back down, I unloaded all my puts, thinking that this was the drop, and this is as far as it was going, which it was. So then it popped again, and I ended up selling the rest of my calls into this pop right here. So yeah, so that ended up going well. I ended up selling at like 850. Yeah, all of them. Yeah, I sold the first one at 850 right here. Then when it got back up here, I sold them again at 730 and 850. So they went to $10. So that was a nice little play on that. Obviously, in the trade ideas room for pre-market, I had puts under 384. I know I'm jumping all over the place. I'm kind of going backwards. SPY puts under 384, which is rate 384. Okay, no, I didn't put anything pre-market. I didn't think I did. I don't know what I'm... Okay, hold on. Let me see what the timestamp is on this. Why is it not showing up? I can't get the timestamp to show up. Why the hell is it not showing up? Oh, it's 3 p.m. Okay, yeah, that makes sense. It's like, why is this is not lining up? Okay, yeah, I put it. I didn't think I put anything in the trade ideas room because I left at like 6 in the morning or something. But yeah, I'm going all over the place. I'm sorry. I'm kind of rambling. This is welcome to the recaps. I always ramble a lot. My mind works faster than my mouth. So yeah, I popped to $10 on the calls on the FOMC. Now I grabbed puts at 301. This is where the trade ideas came in, where I said SPX puts under 384, which is right here, 301. Now the reason I grabbed this, you can see it rejected the RCT trend line right here. Now you cannot really use the indicators on FOMC as a place for support and resistance because it's a news factor, it's an event, and the indicators really don't matter at this point in time. So you got to remember that events and news trump everything. So when it did come up here and reject the RCT trend line, I did ignore it. So it dropped down, it popped back up, rejected again, and that's where I said if it gets below this 384 level, which is right here, that I was going to grab it. Now, as you can see right here, that's the bottom of this candle and the body of this candle right here. So when it broke these two areas right here, that's where I ended up grabbing the 385.40 puts at 470, and then went from 470 to 590. It's a $1.20 move. You get to take it, then it ripped again. Now I get a false breakout right here. It broke out right here, then it quickly rejected. Now I grab puts again at 338, which is right here. Now I had a false breakout, and when I had the red candle come back in, I was like, okay, this is a false breakout, and it's going to come back down. Now I was not expecting this kind of a dump, but I was expecting at least a little bit of one back down to at least this 384 to 384.50 to 384 level. I was not expecting that. So when we had the red candle come in, it started coming down, it started showing it was a false breakout. That's where I jumped into the 38.65 puts at 440, and they went from 440 to $27. Sorry, over a 500% move. It was just crazy. A lot of people in the room were caught off by this. Same was me. I was not expecting this, and so yeah, that was a huge play if you held all the way through. But yeah, you get a watch for these false breakouts because they're kind of like massive traps, and people will, there's actually people out there that went, okay, yeah, it's gonna break out right here, and they go and buy calls right here after it's already made its $5 run. By this point in time, the news is pretty much already absorbed. So when it broke out, they went and bought, and then they got quickly crapped on immediately. So every time in this bear market I see a breakout, I'm thinking, okay, is this a real legitimate breakout, or is this a false breakout? No. So volume was declining, as you can see right here. Well, it was a little higher than back here, but big red candle volume right there, a couple green candles, and it just got crapped on. So yeah, you gotta watch for the false breakouts on the in the bear market. So, and that was one of them. Now on, let's see, Thursday, 8 plays on Thursday. Wow. Same thing. I was not expecting just the thing to keep going and going, and again the same thing. It's rejected. It's breaking out and rejected. Broke out, rejected. Broke out, rejected. Then it actually broke out here, and it reacted to this level. But anyways, let's see. Trade ideas room on the 7th. Let's see. I said SPY calls over 386 or puts under 384. Now, 386 is right here. Why'd I pick that level? Let me back it out. Why'd I pick that level? Oh yeah, the higher day from the previous day, but I rounded up because the higher day was at 385.90-ish. So I rounded up to make it a nice round even number so people could understand and work off that. But because it happened in the first 10-minute candle, I ignored it. And what usually happens, ORB means open range breakout or open range breakdown. And what I do is I wait for the first 10-minute candle to form. When the first 10-minute candle forms, if I'm looking at the call side, as soon as it makes a new higher day on the second candle, I will take it. And that's what I did. I took SPY 387 calls at 285, and it broke out. And as soon as it hit this level right here, it's been very important for weeks. As you can break, let's see, right here, and right here, and back here. So, anyways, yeah. So when it popped, made a new higher day, we did get those 387 calls at 285, and then went to 316. Then it got to the 387.50 area and rejected, and I grabbed puts right there. I grabbed the SPX 3850 puts at $4.20, right at 951, which is this candle right here. As soon as this rejected and reacted to that area, that's where I grabbed it. I grabbed let's see it, 420, and then went from 420 to $6. So in that little place right there. Then it popped back up. Did I reload again? No, I didn't. I didn't reload again right instantly. I waited for 1014, which is this candle right here. I don't know why. I grabbed it here. I didn't reload it here. I probably should have. Maybe I thought it was going to break out again. But yeah, I didn't load it there. I didn't load it there. When it came back up here, I did reload here. So I did grab the 3860 puts this time at 660. And I got that drop right there. They went from 660 to 780, and that little drop right there. Now, I think that's probably why I did not grab it here, because when we dropped, I sold it in that drop, and when it popped back up, it came back up pretty quickly to this area, and I thought, okay, maybe it's going to break out, and it just quickly dropped. And I think I probably was not paying attention when it dropped, and I missed it. And so when it retraced up, because usually when you have these big nasty red candles, you can almost always expect, not always, but most of the time you can expect a 50% retracement of the candle. And when it did right here, it's close to a little over 50% of this red candle. And when it got up here, I grabbed the puts again and sold into that. And then I took puts again at 1122. 1122 right here, right when it broke down in here. Broke out, came back down. I grabbed it right there. I grabbed the 3830, right, the 3880 puts this time at 690, and then went from 690 to 930 in that little drop right there. I was probably really close, or if not, maybe at the money at this particular point. Same thing, broke out, rejected, and then it just kept making higher lows, but every time it broke out, it just kept getting shut down. So I did grab calls at 1143, which is right 1143. Right here? Yeah, right here. We caught this drop right here. Then when it came back up and got close to higher day, and I was thinking, okay, Even though it rejected here, it came back down, it's still making a higher low. When it came quickly back up to near higher day, I kind of grabbed it, not at higher day, not quite right here. I kind of grabbed it a little before, anticipating that if it did break, you could get this kind of a move, because when you break out, you get these strong green candles. And if you buy at the breakout, you end up chasing a lot of the move. That's why if I'm anticipating a breakout or breakdown, I will buy it a hair early for the area breaks, because of stuff like this. And you don't want to chase a nasty pop like that, and then what happens is implied volatility spikes, and you end up getting a crappy fill, and you could end up taking a loss, even though you're chasing it. You don't want to do that either. So I always try to buy it ahead of time, right before it breaks out, anticipating a breakout. I know a lot of people don't like doing that, but I don't really care what other people think. I do what I want, and I do what I think is right, and I've been doing really well with the anticipation of a breakdown and buying before the move actually happens, and that's what I did. Even though the move really quite didn't happen, but I was able to get out with some money. So I had the 3,900 calls right here, and they went from, I got them at $5.20. They went from $5.20 to $6.50. So $1.30 move, you got to take it, you know. And right here, just started, the candles started getting smaller and smaller and smaller. Then I ended up taking puts at like 12.38, which is right here. Right here. Right in this candle right here. Now, the reason I took the puts right here, as you can see, we got the calls here. It broke out. Well, it tried to break out. I mean, actually the higher day is up here, but I'm going based on the bodies of the candles right here. Right here. That's why I grabbed it right in here for this to break out here. And when I caught the pop, I sold into that. And you the candles started getting small and wicky, you know, top wick, bottom wick, and it's getting bought, and it's getting sold, and it's getting bought again. It tries to break out just a little bit, then it quickly gets crapped on, and as soon as it gets underneath this area right here, that's where I get the 38.90 puts at 7.80, and they went from 7.80 to 9.30 in that little drop right there. Now that's another $1.50 move at the money. Got to take it. Plus, look at the size of the candles. Very, very tiny, very, very choppy. Let's see. 12.38. Right here, I got it. I'm going to pop back up. I reloaded at 151, which is right here. No, let's start at 151. Yeah. I got it right here. Right in here. So yeah, we caught this drop. Then when it popped back up again, I reloaded the same puts, 38.90. I got them at let's see. I'm trying to look. I got them at, no, I didn't get them at 12.51. I got them at 151. I don't know what I'm talking about. No, wait. Yeah, 12.38. I'm getting confused. I'm looking at two different ones. And then at 1 o'clock, 12.38 is where I had the puts right there and sold that. Then at 1 o'clock right here. Oh yeah, when it came in, this is where I grabbed it. No, right here, this candle right here. I was looking at the 158, and that's 12.50. Yeah, so we caught this. Popped back up, came back up to near higher day again. I reloaded. I got them at 7.40 this time. And they went from what, 7.40 to 10.40. So you got a $3 move right there, right off this 387.50 level again. Just this thing has been a major factor all day long. Then it popped back up. Then I grabbed the same puts again. I paid the 38.90 three times. This is the third time at 151, which is right here, higher day. Right here is where I grabbed it. Then it popped. And I added more at 235, which is right here. Now I added right here, higher day, and it popped a little more on me. Then you had this line right here, which is from, I'm going to have to probably bring it down to the 2 hour. Where is this from? From over here, from last week. Which was level is this? The 388, 389 level? Yeah, this is from back here on the end of June. So yeah, I got it here, high day. When I came up and touched this level right here and started to react a little bit right below right here, this is where I added a bunch. And I don't remember how many I had. I probably went in large. I know one of the trades I had, I went in pretty large. I don't remember which one it is, but yeah. So I initially got it at 640, and then I got it up here. I added more at 330, making my average 395. And so they went from 395 to 450. I was able to get out green. I think this might have been the one I added really heavy on. So yeah, I was able to escape a loss on that right at the level. Again, I added right at the perfect area again, just right at that level. And this 387, 389 level has been pretty strong. And 390, it's been these levels have been pretty dead on as far as SPY reacting to it from back over here on the end of June. And I think that we'll end up probably seeing a cup and handle breakout maybe this week. But we'll talk about that on the watch list. So yeah, that's going to be it for what on Thursday. Still flawless. Was flawless all week, obviously, but I almost took a loss there. Let's see. Then I had how many plays did I end up having on Friday? 7? Yeah, 7. I traded a lot this short week. I traded Idia's room Friday. SPY puts under 38.50. Right? Yeah. Under 385.50, and Tesla puts under 722. Now Tesla ripped. So I took SPX calls at open. The initial area was right down here. It didn't. It can pop back up. It popped it open, and I waited for the 10-minute candle to form. And if it made a new high, I grabbed a new high a day. Let's see. Trying to think here. I kind of went backwards. I kind of messed up my things. Yeah, I took the calls at 6:30. How the hell did I do that? I took the calls at 6:30, and they went to what, 680. Didn't really go far. That doesn't seem right. I'm gonna have to look at this again. Hold on a second. Yeah, I'm just looking at the exits and trying to figure out what I did here. But I remember now what I did was I bought the calls first, and they went against me right away, and I held them. I forgot that I did this. Yeah, I bought calls right here, and it dumped on me. So I did hold my calls. Now, did I actually? Sorry, that was confusing. I can't believe I did that. Yeah, because when it initially popped right here, I sold some at 670 because I got them in. I got in at initially I got in at 630, and I sold some at 670. So I sold some. I didn't sell all. I sold a portion. Then it quickly got rejected, and it came back down here. I didn't dump my calls. I kept them. I switched and got into puts right away. So now the reason I held my calls was because I was still thinking we were going to get a either a choppy day or we were going to get the cup and handle breakout. Now I just keep thinking that, you know, we're up to this 390 level again, and how can we get up there for the second time and not try to fill that gap on the daily and have that cup and handle play out? Now, what SPY likes to do is it likes to rope and dope people all the time. It likes to trap people. It likes to think, okay, you got to look at it from the mentality and psychological view of, okay, everyone's probably seeing the cup and handle. Everyone's probably thinking we're going to get the gap fill. The herd is thinking that. And the market doesn't want to do what the herd wants, because it makes money off the herd, not helping the herd. So everyone's probably piling calls, me included, but I held some. So what they did was, okay, we're going to flush it. Well, not flush it. We're going to dump it and stop everybody out, because everyone probably bought calls here, me included, like I said. And so I did sell some, but then when I dropped it back down here, it took out all the stops. Everyone stopped out, and that's when it ripped. But I was still thinking we're going to get this gap fill sooner or later. Definitely sooner than later. So when it came back down here, I broke this area. I did grab the 38.50 puts at 6.50. And they went from 6.50 to 7.90 right there. So we got back down here to pre-market lows, and it started to come back up. I'm not quite sure if I got it over here. If I remember correctly, what time did I add? 10.25, which is... Oh, I added back up here. I knew I didn't add down here. I knew it was somewhere in here. It was probably closer to high a day, because it says 10.25, which would have been this candle. So I probably added right in here somewhere. So I didn't have that many calls left over. I don't know if I had 3 or 5 or whatever. So I added a bunch more, bringing my 630 average down to, I added more at 320, bringing my average down to 385. And they went from 385 to 680. I didn't even need to average down. I could have got out even. So that was a monster move. I was not expecting that. But yeah, that's the dirty tricks that market makers like to play. That's one of the things you have to understand with SPY in the market, is that the market makers like to play dirty tricks. That's why you see fake outs, fake breakouts, fake breakdowns. You see these last minute massive moves in the last 10 minutes of the day. Or you see these... whenever you look at the daily chart and everyone's talking about a specific pattern or a specific direction, 90% of the time that's going to be wrong. If the herd is talking about the cup and handle breaking out, 90% of the time it's not. It will happen eventually, but the question is, it's not going to happen when you think it's going to. They're going to make it look like the market's weak, and then they're going to rip it. They love to do these traps. They love to do these tricks. You just got to understand that playing SPY is mostly psychological than anything. It's like psychological warfare against the market makers versus the retail traders. So that's how they make their money, off theater and off tricking and trapping people. So this is why they did that. Everyone bought calls here thinking that the cup and handle was going to form out. Then they dumped them out. Then after everyone stopped out, they ripped it, even though it did not do the break out and do the cup and handle. It's probably going to happen this week, but like I said, it will happen on the day we least expect it. What they'll usually end up doing is that they will chop it like a day or two at a specific level, getting everybody in the mentality that every time you try to buy the breakout, you're going to take a loss. It's going to be fake out, so they'll chop it, trying to kill both sides. Then out of nowhere, they'll rip it, and you'll end up probably missing the move. And if you try to catch every breakout, you'll probably lose a bunch of money trying to anticipate it. And then when it finally happens, you're going to miss it. And that's part of trading. You don't know when the big moves are going to happen. So yeah, I know I'm rambling a lot in this video, but I'm trying to actually educate you on the psychological aspect of the market makers' little bullshit games they like to play. Once you understand their mentality and what their goal is to take your money. So if everyone's talking about a cup and handle breakout and everyone's loading in calls, that's the perfect time to rob people, because everyone's on that side, and that's what they do. So you got to understand that. Then I took calls again at 11.50, which is right 11.50 right here. Now right here it broke out, came back down, broke back, tried to break out again, and it came back down. And when it came back down, I missed this drop. I actually thought about taking puts right here, but I didn't. I don't know why, but I didn't take them right here. I should have, but I took calls. I think the reason why I didn't is because I was anticipating that cup and handle breakout. I didn't want to grab it here, reject it here, reject it here. I didn't want to chase it, especially after this candle. I remember after this that I was actually thinking that we might actually break out right here and do the cup and handle breakout, but I didn't want to chase this massive, look at this green candle. This is what, from 389.50 to 387. I mean, that's a $2.50. That's a $2.50 candle right there. That one candle, I'm not chasing that. I didn't even retrace any of it either. I did a little bit right here. I thought about buying calls here, but I missed it. It went against me. I didn't grab it there because I was thinking reloading calls. I didn't want to buy up here. I waited. Then when it came back down here and retested this level in PDC area right here, this is where I ended up grabbing it. I grabbed the 39.20 calls at 470. I grabbed them a little cheaper in case I was wrong. And they went from 470 to $7 in that pop. Now I switched to puts at 1206, which is right here. Now came back down, PDC's right here, and this level at right together. So the chances of it breaking, bouncing here was very, very high. That's why when it came down here, I grabbed it and caught the bounce, sold into it, then it quickly came back down again. This is where I grab puts. So when it bounces at a level and it quickly comes back down again, it has a high probability of flushing. So I think I grabbed it right in here, right around the 389.20-ish area. I grabbed the 3900 puts at 860, and they went from what, 860 to 1040, and that little drop right there. Then I reloaded again at 1223, which was right here. So we got the drop below these candles right here, so you can see the bottom of the body right here and here. When it broke right there, came back down quickly. That's where I grabbed it. So I reloaded again when it dropped, and it reloaded back up, retesting the breakdown area, because this is actually the breakdown area right here. It breaks down, comes back up, retests it. So when it retests it and comes back down and breaks below this level right here, this is where I reloaded the 3900 puts again at 910. And they went from what, $9.10 to $21 right there. Now I did grab what calls at, let's see, I grabbed the 3900 calls because we had 3900 puts here, 3900 puts here. Came back down here. I was looking at 3900 calls. I got them right at what time? 12:38, which is right here at the 200 EMA, which is this purple line. Came down here, got the 3900 calls at 550, then went from 550 to 610 in that little pop right there. Now I didn't grab puts right here because I don't remember why. I don't know if it was an open interest reason or not. I did not grab puts right here. I probably didn't feel comfortable doing it. I probably was thinking at this point in time that we still might get if I look at my history, I think that I was talking about that they might try to push it up to near high a day, and then at the end of day try to chop it for a end of day cup and handle squeeze, because that's what they love to do. They love to usually sneak these moves in at the end of the day, but it actually didn't happen. So I did grab calls at 120, what's it, 26, which is right here. Now I grabbed it right down here at the 20 EMA, got the calls right there. Then when it came back down, this is where it made because everyone probably grabbed calls here, including me, but me being smarter than most people, that I sold into that little pop. Then it came back down quickly. Then it broke this area right here, taken out, stopped. So if you bought calls here, hoping for this kind of pop, and it came back down, people probably stopped out. And when they stopped out, that's when they ripped it. See, this is the kind of moves you got to look for. These are the kind of moves that happen all the time. People will think, okay, we got this drop here. We're going to buy puts here. We rip it, stop them out. We'll buy puts here. And then they rip it, stop them out, then it flushes. So you got to look for these kind of plays like this right here and here, because this is where you see these kind of plays like right here. They're getting people in, luring people in with shorts, taking them out, luring them in, taking them out, then boom. They're luring calls in here, taking them out. See, they're luring them in right here, taking them out. People are taking out the stops right here, then they rip it. So I waited for this area to break. I wasn't too comfortable with buying below the 20 EMA, and plus the RCT trend lines are right here, that orange line. So you got to watch for these fake outs. So when I saw this fake out and come back up quickly, This is where I ended up grabbing the 38.90 calls at $9 this time. They went from $9 to $16.50. So these fake out happen all the time. Right here, it happens again. Starts to get weak right here. People loaded in with puts right here, popped it, stopped them out, then boom. This happens all the time. You got to watch these fake outs because this is how they trap people. This is a good example. Make sure you write it down to watch these kind of plays because this is what ends up happening a lot. So this is probably going to be a very, very long video on a 4-day recap, but a lot of stuff to go over, a lot of things happening, and so hopefully this video has given you some insight to what I'm doing, what I'm looking at, my thought process, what I'm looking at, and stuff like that, and hope it's helped you a lot. So that's going to do it for the recap video. Hope to see you in the room, and thank you for watching.